What's going on, traders? Hope you all had a wonderful Wednesday. It is July 19th, and we will be doing an analysis here of the S&P 500 Spider ETF and going over our plan for tomorrow, July 20th. Before we do that, reminder that this video is for educational and entertainment purposes only and in no way should be misconstrued as financial advice. With that being said, let's get into it here. We are looking at the daily chart, of course, starting with the macro, and markets were relatively quiet today. We did finish in the green though, up about $1, 0.22%. Final print coming in at 455.20, and the markets did not really like the earnings reports from Tesla and Netflix. Both are down in after hours. However, in Globex, markets did come into 45.80 and showing some support there, and buyers stepping in here, and we have bounced about 9 points from that zone. So it will be interesting to watch as that develops, where we open up tomorrow. Alright, so markets here, the candle that printed, pretty much a doji in my opinion. We've been talking about a potential local top being put in here pretty soon, and I did not enter any type of short today. I was considering it, but I really wanted to wait to see how earnings were going to play out. It was always a 50-50 on whether we would rocket higher or come down. So I wanted to err on the side of caution, and I did not do anything. But I am still looking at the 440 for August puts, potentially for a small swing trade, just to hedge some longs that I do have on currently. Not really too much to report here. Obviously, pretty much a nothing burger day. We pretty much traded in our range for most of the day. We did see a little bit of selling towards the end of the day, but then it was markets were bought back up. We didn't quite get to the top of the range, but almost, and then we kind of just consolidated until the close. So let's look in closely here. Let's go into some of our other charts. Let's come into our trends and see if there's anything we can take away from that. Still, really not too much has changed. We are still above this major pivot, so that's going to be key for the bears to get back under, depending on when we get there. If we do, down in the basically 454 area, but bigger picture, the bulls need to defend and the bears need to break under 452, taking out this bull flag breakout, and that would be much more of a confirmation for any potential bigger downside move. So we will watch to see as that develops, but certainly getting a bit frothy, as we have been talking about. And Momo now is finally starting to catch up in those real overbought areas. So now we're getting a little bit more confluence with the weekly being extremely overbought, and now getting there on the daily. So we'll have to see what goes on as far as that's concerned. We were looking, of course, at this other chart here, bigger picture. Let's go back. Okay, let's keep it at a daily now. We were watching, of course, this trend line, which we are still above. We did break above this double top. I'm still going to be cautious. Again, I was talking about this in the last video, this potential scenario playing out again in the markets, and coming into August here. So that will be interesting to see if we see is a similar situation. It's actually funny. it's almost, well, not quite the same candle, but very similar. You can see that rounded top here, but we really have not seen that rounded top scenario yet here, but the candle much smaller, but it'll be interesting to see if we just kind of roll over. But again, we have to break back below this trend line for really there to be any of that a bear case to speak of. And then, you know, we look for the retest. This is the safer move after a break, retest, and then back down. So we will monitor that very closely. All right, so let's get into what we're looking at for tomorrow. Let's go into our balance trend zones here. Okay. And come a little bit closer. All right, you can see here the bounce being put in Globex as we have started to move up. Now I'm wondering, you know, we were talking about this in the last video. We go from balance to trend, balance to trend. So I'm going to be watching to see if this is going to be the new balance zone that markets try to establish as we go through some price discovery. I don't believe, let me just double check the earnings. I think those were really the main earnings catalysts for this week. Just triple check that. I really don't think we have any other big market movers. Unless you consider Nokia. No, nothing really. Just American Express on Friday. I don't really think that's going to move the market much. Yeah, so nothing on as far as that's concerned to watch out for. I do believe we have initial jobless claims though. Tomorrow. Yes, we do have jobless claims tomorrow at 8:30, so I'll keep an eye on that as well. And according to the Credit Suisse economic calendar, some PPI as well tomorrow, and on Friday we have Michigan consumer sentiment, so we'll keep an eye on that. But what we will be looking at here for tomorrow, pretty straightforward, right? We've got that 50% gap of our balance range, so that's going to be my trigger for longs if we start to get back over really 50% here. And it's really, you know, the high from yesterday at 454.83. I will call it anywhere from that level to 455. It's going to be a long trigger to potentially come back up into the range. Today you can see how this drop was eaten up, and we pushed higher into the 25% quadrant level of our balance zone, unable to get over that. So we'll be watching if we do see some confirmations back over the 54, 55 area. Then we'll be looking to come into that zone right here. If we are over, probably personally would be playing at the money calls 455s with the first target into this 456 zone, and then the 450's next swing high would be the next area. Getting over that probably will give us the next potential breakout move, where we'll be targeting this next 457, 50, 80 zone would be my next target out of that. Remember, you know, I'm highly against chasing the breakout, so for me, I would only be looking for us to see some type of sell reaction back in to retest the liquidity back at the top of this range, and then take that long at that point. So that's two ways you can play it for the bulls. Other than that, if I go long here at the 55, probably take out a good chunk here, maybe another exit here, and then leave my runners for that potential breakout, right? Okay, and for the shorts, really pretty simple. Gonna need to break underneath Tuesday's highs here, under 453. So at that point, if we do get a confirmation, again, I don't chase the breakouts. I'll be waiting for a back test there, waiting for the sell reactions, and I probably would be playing 453 puts, or even 451, 452. Any of those could potentially work, and I would be targeting back down to the Monday highs, right around 452, and then looking into this potential area at the 451. And actually, let me go back. Let me change this. No, that's not what I wanted. There we go. Just wanted to see something. Yeah, no, I thought I needed to see something on here. But let's make sure, and this is a great example here of why we don't chase the breakouts. You can see broke, fake break, and then got bought up. So really need to see those candle closes and that potential retest, and the sellers come in for that, for the safer trade. Just the same reason I won't be chasing the breakout here as well. And you can see here, fake break. And then we got pushed back down. So breakouts are a fool's game in my perspective, and we wait for those confirmations and the retests to be able to do anything. But yeah, pretty straightforward plan, and let's see what we get tomorrow. All right, take care.